Hello, everyone. Welcome back to the RationalInvestor.com's daily brief recap. Today is, where are we here? I think it's Tuesday, isn't it? Yeah, Tuesday, 20th of July. So steamrolling our way through the summer. Options expiry is done. First 2 weeks of the quarter are now in the books. A pretty good idea where we think we are in the economic cycle. The only issue here is what's the Fed up to? And they always say, don't fight the Fed, don't fight the Fed. So Fed just came out and said, hey, inflationary pressures are a little bit stronger than we expected. Maybe we need to cool things down a little bit. So as a result, we're kind of humming and hawing, where exactly are we in the economic cycle? And then, of course, we've got all this hospitalizations and what's going on here with this COVID. It's really weird how this is working, though, because I showed some data and it showed that the cases and the rates were all falling. And then you show other data and it shows that all it is just an offset. Yes, COVID is falling, but other ICU cases are ramping up. And so, I thought it was interesting. Non-COVID here last January cases were like 3,000 in California here. Now non-COVID are 4,400. That's a 50% increase in sickness. What? Or maybe it's just too many people were just lumped into this category last year, and the statistics are just balancing out. Regardless, people are still getting sick. And I don't know whether it's just, me personally, I think it's just they just completely mislabeling all this. So also, too, I do believe that there is a push in our society right now by the people that sort of run the show here to try and get, this whole sort of financial asset model reset taken care of. And I do believe that to a certain degree, this sickness is used as a cover to get away with all of this. So, I did find it interesting. I've been talking to everybody here about how I felt that the stock market was going to be encouraged down to try and get those democratically elected politicians to behave and pass more free stimulus money for the banking class, basically get away with their banking tax of this inflation. Well, anyway, we don't need to go into that. You all know the story there. And I think that's on course. Fascinating that when you open up the newspapers, now all of a sudden they're blaming stock market thumpings on, the Delta variant is starting. Well, we were talking about this a week ago. That Delta variant news is actually old. That's not new news. So why is it that they're pulling that out of the cupboard to justify the fall in prices? When, as I said, I personally think it has everything to do with politics right now, which is very disappointing. And it's just yet another anecdote of the way the 1% manipulates the public and the democratically elected politicians to get what they want. Yeah. Anyway, it is what it is. Dead cat bounce today. So interesting how they've come out with the news headlines. Why did the market break yesterday? Oh, it's a Delta variant. What, did all of a sudden that stop? And that's why the market's rallying? No. There's other shit going on here, folks. Anyway, I also heard too yesterday, I think Delta just got absolutely smoked. Which is one of these transports, and I've been talking to you guys recently about how the transports are just an absolute nightmare right now. Where the hell is it? Boom! Right, Delta actually gapped violently lower yesterday, so they are trying to fill the gap in here today. But point here is, I've talked to you guys about the transports and the way the oil price just kept going up. I think this is one of the major reasons why the stock market needs to pull back, is that the transports are just not validating what they've done here to the major indexes. So we got to deal with that problem. I mean, there's a bunch of moving parts here that are just a mess. So back to your story. U.S. dollar index. We've talked about this as, I guess, in this particular case, great, fear proxy. Heading back higher. We're actually now back at the point where you guys, I don't know, any long time watchers of this video channel, I was saying through here, my number one job is don't get in the way of this trade. Then the market goes and gaps violently lower, comes all the way right back down to the original bottom, puts in a bottom, and of course, hindsight 2020, maybe I should have sold my positions here and then bought them back here, reload, all that bullshit. And here we are right back up at the old level where my number one job is don't get in the way of this trade. It's so ironic that here we are right back at that same level. Could we take another swoon here? Sure, it could happen. For the record, and I've said this repeatedly, I am a US dollar bull now for the next 15 years. The irony of it all is that the bottom actually is way over here. I mean, look at it. This bottom actually came in through the 2008 financial crisis. So even now, we're still a million miles away from those lows. But my whole thesis was that this was actually the pivot here. And we should work our way higher here. And actually, I got to say, if this double bottom now fires, oh boy. I mean, you can see there's foggies up there. And then, the real foggy that I would be expecting this to trade to is actually up here. So we'll see how this goes. I mean, as I said, this is more sort of demographic cycles and money flows versus do I really like the US dollar itself, or is this just like ironically enough, the US dollar index is like an anti-fiat currency proxy. This is the US dollar index is a basket of all these currencies. So if I'm bullish of this, then what it really means is I'm bearish of the Canadian dollar, I'm bearish of the Aussie dollar, I'm bearish of the euro, I'm bearish of the Japanese yen, I'm bearish of the Swiss franc, et cetera, et cetera. So, and interestingly enough, the end game of this story, I think, comes this fall. I think there's going to be some serious fireworks in the capital markets this fall and winter. So get ready, folks. Anyway, in the short term, pointing up. That's usually a risk-off bet. We'll see how that plays out in the stock market. You can see the oil market did break. Remember we talked about Delta, not very happy there. Maybe finally we're going to get this market to calm down a little bit, and these companies are going to get a little happier about running their business. But gee whiz, ugly top there. I don't really want to invest in oil, to be honest with you. I would much rather find other proxies. Thought it was interesting that alternative fuel stocks. In fact, actually, there's one SPAC that we bought recently that they actually went into the electric automotive industry. So, I wouldn't mind maybe investing in that kind of space going forward. I don't know whether I even really like the idea of investing in quote unquote oil. I do like the idea of investing in oil services, energy. That's probably a better way to frame this. But anyway, shake it now. I mean, even just trade wise, I would probably, who knows? You might get stopped out like this kind of thing, where you're thinking this is a top, market rallies up into that, and then gives another topping signal, and then boom, everybody gets FU'd. I wouldn't be surprised if that happens, because this is sort of like don't fight the Fed. If the Fed wasn't involved in propping up the market, fake bullshit, Fugazi market, got to inflate the equity markets and the capital markets to offset the size of the old debt, blah blah blah, then this thing will just keep churning its way higher, right? I mean, who knows where the hell into this? Maybe we have to get used to 100. 200. I even heard somebody outlandishly say now, in this modern monetary theory, Fed's just going to keep printing. Somebody actually had a goal of $300 for a barrel of oil. Is it that $300 is such a great number, or is it that the currency itself is worthless? And I got a funny feeling it's the latter, not the former. Trading wise, oh god, this market is. I would actually even suggest just leaving this alone. There are easier places to make money now, I think. But let's watch. For those people that do trade, there is a micro contract now for crude, which is kind of cool. So I might get into the habit of trading that with Kiran and Daniele. But there's trendline resistance. We could probably also do fibs heading back up top. So there is reload zones. And notice price gaps all up in here. So, any kind of counter trend rally back up into reload zones. Nice failures. Not a bad level. So think about that. Of course, rally back up and a W on top. And get ready. Higher we go. And this probably is entirely predicated on whether the U.S. Congress passes another big whack of free money. It's not really free money because the checks will be printed, but everything in the marketplace will have to be revalued higher because the funny thing is this is where the socialists they learn the hard lesson that there's no such thing as free money in this world. You go and print a whole bunch more money to pay for social programs. Well, prices of commodities will just simply rise to offset that printing. It's actually Newton's first law of physics, if I'm not mistaken. Or maybe it's the second law. But matter cannot be created nor destroyed. It's exactly how you describe the equity markets and the commodity markets. Nothing is unconnected. And probably as a really good testament to the problem that's developing here into the fall, look at what we've got happening in the gold and silver ratio. So when this is pointing down, that's usually bullish of the economy. Things are doing well. When this thing's pointing up, it means that investors would much rather buy an ounce of gold and bury their head in the sand than buy an ounce of silver and go and manufacture something. So right now, that is saying we're not very happy here, folks. And I think I noticed that. Like gold stocks are rallying, silver stocks are not. So be cognizant of that. That's a pretty powerful message. I wouldn't be surprised if, this turns into some sort of big fractal here. So up into this area, then a pullback, then away we go. So that's probably our future for the next maybe month or two. Ugh. So party. Bond market seems to have run into a bit of resistance here. It might be on the fact that they've knocked the oil market down and now it's going to do its counter trend rally. Probably you have bonds pull back into support here. The gold price itself, tough to be super bullish of this, unfortunately. I do like little individual gold stocks and little junior VCIMers. I love them. They're just the best. The actual bullion itself, ironically enough, look at the size of that gap there. I mean, this gap at some point will have to be filled in, and I think that's kind of what's going on here right now. They're just slowly working this up to fill that in. Any kind of M here, though, and especially if oil takes off there. We start doing that kind of thing, oh boy, look out, Betty. And I wouldn't be surprised. A, B, whoops. CD. Wouldn't be surprised if we actually have to come back down into here at some point. So be cognizant of that. I like the gold coming out of that seasonal window, but gee whiz, that's not really an inspiring bottom. If anything, I'd love to see if this thing really is a W, right? Down, up, down, breakout. So a little bit of pullback down into the bottom of the range here. And then give me a nice W over here and we can all start getting super insanely bullish. But for the time being, kind of blah. So I'm not really doing any buying in gold today, that's for sure. There are a few little junior gold stocks, VCIM kind of ideas, though, that I do like. but none of them are technical buys. I suppose kind of like how the stock market's bounced back here smartly. Railroad tracks looking a little more positive. Junior stocks trying desperately to hold on to these lows. That's an SDM though, so dangerous looking chart. And good old crypto. Crypto, I suppose like stocks, like oil, risk assets, junior crypto looks like poop. Junior stock market relative to the big market looks like poop. Junior crypto relative to senior crypto looks like poop as well. But even senior crypto kind of looks poopy here. So it's all risk market looks still very, very dangerous. And I know I even said this in the daily brief. People are like, oh, well, what about summer altcoin season? What about, going to make lots of money in Lambos? Well, maybe it just isn't going to happen. Get used to it, folks. I mean, that's the way the market acts. The market will do any old damn thing it wants. And I often say to people, do not get into the business of predicting because the market will usually make you look like an idiot when you get into the business of predicting. So as it stands right now, I mean, hell, these bearish setups are still working away. I want there to be a summer silly season in crypto. But if the market just ain't going to cooperate, I don't see any W's here. I see market just move to new lows. I see a move stop to trailing level. Could come on a nice serious test of that low. And then ultimately, it's just this little bot's objective is 23,000 in here. There's good old Mountain Man. We've talked lots about how he really needs to be traded to. So I don't see any reason to be bullish here. And the worst part about this is, all of these little ones, they're at the bottom ends of the ranges. But again, we were talking about this one. We went and did a little bit of nanny nibbling of this, but I don't see any reason to get hugely bullish of that. And like Litecoin, for instance, this was one that I traded, bought, then hopped off and said, fuck it, I don't want to get in here. This is too dangerous. And then we actually drew out, turns out there's bearish setups, but I don't really want to went shorts here because I think we're closer to a bottom than a top. But you can see the top is working away and boom, and this one came down, slammed into that level, took that low out. Just like that, the other ones, all of this appears to just still be pointing lower. There's no reason to be bullish here at all. So it's just big hurry up and wait. And I suppose when we do get, maybe we can get some sort of big honking capitulation, rip the Band-Aid off, kids are all screaming and yelling, then maybe we can start thinking about, okay, the bottom is in. But I don't see any signs of a bottom yet. And these things all look like they're still pointing much, much lower. So just gotta cool your jets. Just gotta wait. If you have names like like shitcoins and stuff like that, ironically enough, in this kind of environment, shitcoins they just don't do anything. So you notice like some of these are up a bit versus Bitcoin, down a bit. I thought this one was which one was it? This one was kind of funny. This is such a typical shitcoin through this kind of environment. It's not going to do anything. It's just going to sit there. So, just a big hurry up and blah. Just got to wait. And I thought this was a great analogy. We'll leave the video off on this for you guys in the public. Perfect analogy of crypto. My missed $49.99 up, $14.99, 42% cat rally on the day. Oh, we're gonna be rich. This is awesome. On no volume. What? How does that work? Somebody bought. No, they didn't. I don't know. But point here is, this is crypto. It's so speculative. It's so venture cap. It's kind of screwy sometimes the way this shit trades. We just went through that insane blow off top. Somebody should hold this son of a bitch to account. I warned everybody. But, lower highs and lower lows. Does that look like it's Wing yet? And until this thing W's, there is no bottom here. And we just broke to new lows. Oh, poor kids. So, where's the alt season for the summer? Maybe there isn't one. I don't know. I do like the idea that if you can force yourself on dollar cost averaging plans, Once we get down into things like reload zones, well, you can actually start forcing yourself to be a buyer here. So even on something like dog money, I actually don't mind if you're like once every month or two nanny nibbling now and acquiring. I don't mind that. Is this a rip roaring bull? Is this a buy signal, quote unquote? Pound the table? Not even close. And my hunch is actually this probably still has to go lower. So that's not exactly the report that you people want to hear. But at the same time, too, at least I'm not blowing smoke up your ass. Might as well call a spade a spade. All right, there's your daily brief recap. Sure hope you got some value out of it. Slow and steady wins the race. Don't take no wooden nickels. Don't place too big of bets on anything. And just remember what your number one job is, right? You got to make damn sure you can come back and play the game again tomorrow. So that means if the market does prove that you are wrong in your thesis, you've got to man up, lady up, whatever up, and you got to hop off. So don't break those 5% rules of risk management. Really, I might argue if you're day trading, maybe knock that number in half, maybe even 3/4. And, if you bought and the market's moving against you, respect risk management and get the hell out. All right, everyone. I hope you enjoyed that. PMA for the win. Good luck in following your plans. And we'll see everybody again here tomorrow. All the best. And Kevin, if you could take us on out of here, the only left for Brian to say at this point is bye for now.